Welcome everybody. In this video I'll be talking about my expectations about NIO and possibly breaking even in the fourth quarter of this year. If you watched my live stream of NIO earnings, then you saw already my estimations, but also NIO have been doubling down on their annual targets, and one of them is growing 100% year over year, so roughly 450,000 cars being sold, plus breaking even in Q4. And in previous videos I outlined how there might be other indicators or things that could happen that would help NIO to break even. For example, carbon credits, license fees, and other stuff. There is some talk around NIO could start capitalizing some R&D and stuff. But none of this is part of this video. Instead, I want to look into what NIO could do on the revenue sales side of things, and then also on the cost side, and how this could balance out into a profitable quarter in Q4, and what it takes, and also what are my estimations. And in short, if you don't want to watch this video to the very end, which I highly suggest you do, that you watch it till the end, then here are my main takeaways, which are: I think it will be a tight and tough one to achieve. It's not going to be easy, but second, and that's one message of this video, I think it will be possible to break even if the yearly targets of the sales are not being met. So what does it mean? Let's look into it. You've seen me dialing down my 2025 full year estimates, basically from 360,000 down to only roughly 340,000 cars being sold. So that is way off. It's actually 100,000 units off of the announced targets by the management, right? So you can see I'm already much more conservative here, or in other words, Li Bin is pushing out very big optimistic numbers here, and I simply don't see them happening. Why? Mainly because of Onvo. I mentioned how I think that it takes more time, and I don't see it just growing overnight, and therefore my estimations are quite low here. Although I have to say, NIO as a brand, more mature, and now with the updated models and so on, could actually surprise. So basically for my Q4 numbers, I'm arriving in total at slightly below 130,000 quarterly sales, so less than 70,000 for NIO itself. So that's translating in roughly 22,000 something monthly, 40,000 for Onvo, so that's more than 10k monthly for Onvo. And Firefly I only have at 20k. This one could actually be maybe a little bit up, who knows. I'm having quite an optimistic outlook on Firefly actually, but yeah, in total I leave my expectations here for Q4 at 20k, and the 128,000 that I have as a total estimate here for Q4 are actually 20,000 plus units below what Li Bin has guided towards, and of course for the full year it's way less than that. Now let's just jump quickly into my estimates, how this could translate in financials. So I think vehicle sales could reach roughly 4 billion for the Q4. Other sales I see rising. I think last year, if I remember correctly, was roughly 400 million. I expect it to rise given the user base is growing strongly. So total revenues at around 4.5 billion USD in a quarter. And yeah, the cost of vehicles, I mean, that's the very important part, right? Will they get to a sales margin or a vehicle margin that is on aggregate 20%? I think that's possible. I think we're going to have some very high premium models coming up, like with the ES8 coming out. We've got the ET9 finally getting into the numbers. We got some improvements in the NIO margins across the board, I guess. And then even if the Onvo numbers are that low, I think some scale effects are finally trickling in for both Onvo and Firefly. So here's my hope. 20% is, I think, definitely not a walk in the park, but they should be aiming for that. And also on the other sales side, note how is this lower the cost side 100 million than the revenue that they're having, meaning I think that their other sales business, services, stuff like e-commerce, stuff like selling home chargers, stuff like the battery swap services and stuff, will break even in Q4 substantially. And what could always go in there as well, I've talked in other videos, and it may actually bump the revenues, but also these other sales on the cost side, keeping it low, is maybe some high margin stuff coming in, like the credits and so on. Although in this assumption, it's really not in there, I would say, but that would leave us at a really nice gross margin of 20% as well. And then we're now coming to the really important part, like, what kind of expenses do they have to pay off with that money coming in? I'll keep the R&D expenses at 400 million, which is roughly where we currently are already. So I'm assuming that they are, not increasing them for the quarter in Q4. I think there's even potential of bringing them down lower. However, I have to say my assumptions for the SG&A expenses are not that high, 500 million. So we are occasionally currently higher than that, but this is also a little bit to do with the seasonality fluctuations and stuff. So I think the target must be to get to this operating expenses of around 900 million, and that will give us a loss of operations, or then we go into this whole gap and EPS type of stuff. But basically, there's more money flowing in than going out, so that will technically get us to a profitable quarter in Q4 based on these type of estimates. And that again is, how I said, based on these lower figures. However, as you can see, there are many assumptions in there. It's just one way of how this could play out. I'm feeling free to adopt it based on what's currently happening with NIO and stuff. But this is a way how they could break even without meeting the sales targets, right? And just to give you a sense of how big this task is, basically this is a chart of showing in the orange line the SG&A spent per car sold, so per unit, and it's been round about 10,000 USD if you calculate that number. Last quarter, it's been in Q1, it's been very high, but as you see, obviously that's bouncing quite a bit. But the big task here is NIO will have to really scale the revenues coming in and the sales. At the same time, they really need to keep the SG&A expenses in absolute numbers where they are, but relative to sales, it needs to be almost, definitely be cut in half, but more to 1/3 of where they currently are. I think the target must be to get them to 4,000 to 5,000 USD per vehicle instead of the 10K where we've been in the past. So is that possible or not? Well, other companies like Li Auto and XPeng have shown that. They have also had those sort of higher SG&A per vehicle sold in the past, and they have actually cut them in half or even more. It's now NIO turn to try that as well, but I'm just telling you, that is the necessary step. This is what will be moving the needle. This type of operational leverage is what they need to show, and giving you the numbers of how this could actually work out on these assumptions that are shown on a year that is, or a quarter that's actually a little bit or well below the actual estimates that the management was putting out there. And of course, if management gets to their estimations, that will make the task more easy, I guess, but not more easy in case if they need to spend more on selling, general and administrative expenses. So long story short, this is what I think is potentially up there for us, aiming for in Q4. Let me know in the comments what you think about that. Thanks for watching, and fingers crossed we get there. See you in the next videos.